Three questions you should ask yourself when establishing a fund is, are you happy letting others manage your money? If you are, then you might be better off staying in a retail fund or an industry fund. Every SMSF must have an annual audit done every year, legally required, has to have an annual tax return done. A pro tip is don't close your old fund down if you have insurances in place. Otherwise, you may inadvertently cancel those off. All of a sudden, you become uninsurable. Avoid setting up the SMSF by yourself. The ASIC report that came out recently showed that 62% of advice failed the compliance test. So DIY is even riskier. Avoid trying to do that yourself.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it.
Okay, guys, and welcome to this edition of SMSF Insider, where we'll be talking about how to set up your SMSF in 2026, the complete guide. Firstly, you need to establish whether an SMSF is right for you. Once you've established this, you also need to make sure you've got enough money in your super initially to set up the fund. The minimum balance, or the guideline that the ATO gives, is between 200 and 250,000 is the guide that the ATO gives before you can set up an SMSF. And the reason for that is because the costs for the accounting and the independent audit, those costs are typically a fixed cost or a fixed fee. And when you break it all down as a percentage, it normally around the 200,000 mark is where it becomes more cost effective to have an SMSF when you're talking from a percentage point of view. So that's the reason the ATO give that guideline is more so from a percentage-based cost perspective. The three questions you should ask yourself when establishing a fund is, are you happy letting others manage your money? If you are, then you might be better off staying in a retail fund or an industry fund. But if you're more engaged and you want to invest in assets outside of what the retail and industry funds are offering, then certainly an SMSF might be more suitable for you. Do you have a strategy? So you need to have a clear reason why you're setting up an SMSF, and that might be to purchase direct property like residential, commercial or industrial, or you might want to have crypto exposure in your SMSF, which you might not be able to get access to in your industry or retail fund. So people who want to invest in assets that industry funds don't have access to, it might be crypto, it might be direct property, it could be IPOs or ICOs or crypto. So those are the types of assets that people who are setting up an SMSF typically might want to have access to those particular asset classes. Couples who want to combine their super as well, pooling your super together to give you a bigger fund balance and then therefore give you access to different assets like property, for example. So if you have decided that an SMSF is right for you, these are the steps that you need to take for setting up your SMSF. Step number one is choosing your SMSF provider. Who's going to set up the fund for you? And this is where Blue Chip SMSF Services comes in. You need to have a trust deed. You need to have the SMSF registered with the ATO. You need a bank account established. You need to have an investment strategy. And of course, all of the compliance framework that goes around it. Avoid setting up the SMSF by yourself. The ASIC report that came out recently showed that 62% of advice failed the compliance test. So DIY is even riskier. So avoid trying to do that yourself. Engage a specialist. Blue Chip has a 5-day typically to get all of the docs out to you and express posted to you. Versus traditionally, 4 to 8 week timelines. So if you want the funds set up quickly, reach out to Blue Chip and the team will be more than happy to assist. Step number 2, register. The fund needs to be registered with the ATO. Your administrator, whoever's setting up your fund, will handle this. The fund will receive an ABN number and a tax file number, and you'll need that for the establishment of the fund. The fund must be registered as a regulated superannuation fund with the ATO. Step number 3 is creating your trust deed. Whoever's setting up the fund for you will create this deed. This is the legal document that governs your SMSF. Must be professionally drafted to include the members, entry and exit provisions, investment powers, pension rules, death benefit nominations, and critical for 2026 is ensuring the deed includes provisions for new payday super rules and Division 296 tax changes. Step number 4, appoint trustees and open up the bank account. All members must be trustees or directors if using a corporate trustee. Open a dedicated SMSF bank account, must be separate from your personal account, and set up online banking for contributions and investments.
Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode.
Step number 5, roll over your existing super. Contact your current super fund and request a rollover to your SMSF. If you're engaging an SMSF specialist, they should be doing this for you. Provide your SMSF's ABN, TFN and bank details, which can take anywhere from 7 days, anywhere up to 21 days for funds to transfer. It can be longer depending on where the funds are coming from. A pro tip is don't close your old fund down until the money arrives, and be careful about closing that fund, your existing fund, down if you have insurances in place. Otherwise, you may inadvertently cancel those off. And if you can't get insurance anywhere else, all of a sudden you become uninsurable. So make sure you're getting the right guidance around that, around closing down your existing fund. Step number 6, create your investment strategy. So that's got to be legally required to be done within 45 days of setting up the fund. That document is basically outlines where the asset allocation, the risk tolerance, liquidity needs, insurance requirements, and diversification approach for your SMSF. That must be reviewed annually and updated when circumstances change. Blue Chip provides you with a template, so you don't need to worry about creating that yourself. After the fund is set up, you're ready to make your investment. So you can open up, if you're trading shares, you open up a brokerage account. If you're buying crypto, open up the account with the exchange, and or if you're purchasing property, then start engaging with your conveyancer or solicitor for settling that property. For crypto, use of exchanges that accept SMSF accounts, so make sure that whoever you're setting up your account with, that they set up accounts for SMSFs. Blue Chip can provide you with some details of exchanges that do this, so be sure to get some guidance around setting up the account for your SMSF. The key rule here is all investments must pass the sole purpose test, and that's for all assets within super. And sole purpose test is essentially solely for retirement benefits. Number 8 is understanding your ongoing obligations. So every SMSF must have a annual audit done every year. It's legally required. Has to have an annual tax return done. That's due at certain parts of the year, times of the year, depending on when your fund was established and how long it's been established. Statements must be provided to all members, compliance reporting to ATO via annual returns, and the investment strategy review at least annually. Number 9, contribution rules for 2026 is same as the 2025. So concessional contributions are $30,000 per year, and non-concessional contributions are $120,000 per year, or $360,000 if you're going to use the roll forward provisions, which is 3 years worth of contributions. Division 296 tax, if your super balance exceeds $3 million, you'll pay an additional 15% tax on earnings above that threshold once those assets are sold. And payday super impact, so from July 2026, employer contributions arrive more frequently, and that will be each pay cycle. So next, here's what you can and cannot invest in. So you can invest in Australian shares, international shares, ETFs, managed funds, term deposits, bonds, residential property, industrial property, commercial property, crypto, also with conditions. And some things you can't invest in is things like collectibles for personal use, residential property you or a relative lives in, assets purchased from related parties, except business real property and listed securities. Well, the top 5 common mistakes is using a generic trustee that doesn't cover all scenarios like divorce, death, and disputes, not getting a corporate trustee and regretting it later, mixing personal and SMSF money in the same bank account, instant non-compliance, forgetting to create an investment strategy within 45 days, and not understanding the 5% in-house asset rule and accidentally breaching it. The biggest ongoing mistakes is treating your SMSF like a personal piggy bank. All transactions must be at arm's length and properly documented. Keep receipts, maintain records, separate personal and SMSF expenses. Here are the setup costs that you can expect to pay for setting up your SMSF. So establishment, anywhere from $1,000 to $4,000. Corporate trustee, anywhere from $500 to $2,000. Total setup cost can be anything from $2,000 to $6,000, depending on who's setting up your fund for you. And annual expenses are very similar. Depends on who you're going to, who's looking after your fund, but accounting and tax return could be anything from $1,000 to $3,000. Annual audit from anything from $500 to $1,000. ASIC and ATO fees could be anywhere from $300 to $500. They have their own individual fees. And the administration and software could be anything from $300 to $1,000. Some providers will just give you a one price. Like we do, we give you one price and that includes absolutely everything. And others might seem cheap, and then all of a sudden they start adding on a whole bunch of other services, and then all of a sudden the cost that you thought was going to be cheap ends up being quite expensive. So prices range anything from $2,000 a year to $5,500 a year, depending on who is looking after your fund for you. The blue chip advantage: why would you use blue chip SMSF services? We have a 5-day turnaround as opposed to 4 to 8 weeks with traditional providers. There are no financial advice conflicts with blue chip SMSF services. So we don't provide advice into investments that we are receiving kickbacks from. It's just a no advice, very simple, no conflicted model. Compliance, so first approach, every fund is audit ready from day one. Corporate trustee is included. We don't cut corners, and ongoing support. It's not just the setup, but we also do the ongoing support and hold your hand through the entire process. If you have any questions about the information we provided today, drop a comment in the comment section below, and we'll see you at our next episode. Thanks for tuning in. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.